My investment portfolio is £33,000 down in the last couple of weeks. I'm going to talk you through exactly how I'm reacting to that, what I am doing, and what I'm most definitely not going to be doing. So yeah, let's get into it. So my Vanguard Global All Cap Fund, which is the V3 ABL, for anybody who wants to have a look at it, is down from a high at 5.95 to where it stands today at 5.48. So my £420,000 portfolio has dropped to £386,000, which is a loss of just over £33,000. To be precise, I done the numbers this morning, I'm £33,176 down, which sure is painful. 33 grand is a lot of money to anyone, I'm sure. It's certainly a lot of money to me. But I'm not panicking. I'm actually not even worried. And I'm going to talk you through exactly why. And I think the first thing to put into context is 33 grand is an awful lot of money. Don't get me wrong. It's a massive amount of money to anyone. But when the funds start getting bigger, the swings get bigger. It's actually a 7.9% loss, which isn't great. But to put it into context, my portfolio has earned over 13% since I started investing. So, had a really good run. There was always going to be a dip. But it's also very similar to this time last year, when our President Trump decided that there would be some new tariffs. That had a significant impact on the investments, on everybody's investments, on the stock market. And there was similar falls last year, and then there was a really strong rally for the end of the year, and we still finished way in the green. It still was very positive year 2025 for investors. So I'm not worried for various different reasons. I've been investing for over 10 years now, and this is just common. This is kind of the price of entry to investing. If you pay too much attention to these big swings, then it really will drive you crazy. You've got to almost ignore them. And a low 33 grand is a massive amount of money. I'm ignoring it. I'm not panicking. I'm not doing anything. The big thing I'm also not going to do is materialize these losses. So at the minute, if I withdraw my portfolio, yes, I'm down 33 grand, but I'm not doing that. I'd be absolutely crazy to start withdrawing money when it's in free fall. Who knows what's going to happen tomorrow? It might rally and it might start to turn around, or it might drop another 8% or 18%. None of us know what's going to happen, but I'm not going to try and predict that either. A lot of people will try and time the market. They'll think, oh, it's on its way down, and they'll sell. What happens when you do that is often the market rallies again and you miss the best days in the market. And if you miss the best days in the market, that cuts your returns massively. I think if you missed, the top 10 days, you lose significant percentage of your portfolio. So I'm not panicking. What I am considering doing is actually investing some more. So I'm thinking about where can I get some money to buy some shares. I learned this from kind of Zig Ziglar, but it's to zig when everybody else zags. Do something different. When everybody's panicking and selling, I actually want to buy. So I'm actually looking for ways in which I can raise some more money so I can start to buy some more shares. The old saying that stocks are on sale is partially true. I can buy the same stock 8% less than what I did a couple of weeks ago. So I'm trying to buy more. And I think it's really important to document this because everybody talks about the wins. Everybody talks about how good investing's been over the last few years, but there's always going to be these rocky moments. So I think it's really important that we share this with everyone, because if you want to invest long term, you've got to get used to this. It is going to happen. The only thing we're guaranteed with the stock market is that nobody knows what's going to happen. It's going to go up and down. But historically, we're all backing on the fact that it's going to go from bottom left to top right. It's going to go in the right direction, and it's going to gain, and it's going to earn you more money over time. So I think it's really important to document this. And emotionally, as humans, we are terrible investors because we do get too attached to it and we make decisions based on our emotions. And the good thing, what's worked well for me as an investor is really taking a back seat. I'm not a genius. I can't time the market. I don't pick stocks. I simply put money in every month and leave it. That's all I do. Pick a good fund with low fees, put the money in every month, and then I leave it. I do nothing else. The other thing that makes this slightly easier for me is I've seen worse. Like I said, I've been investing over a decade now. In 2020, when the world was turned upside down by we all know what, I think the markets fell something like 40%. Now, my portfolio wasn't as big back then, but a 40% drop is a massive. That really hit hard. Everybody was getting furloughed. My job wasn't very secure at the time. So many different things playing a part of that. I could have very easily withdrew money. And if it wasn't for 2020, my portfolio wouldn't be as strong as what it is now because of that dip and because of me continuing to buy in that dip. My portfolio is in a way better place now than what it would have been without that. So these downturns can actually be really positive for long-term investors, especially if you keep buying, because like I said, you're buying stocks when they're on sale. But the overall thing for me is, as a long-term investor, nothing's changed. Just because the markets fell hasn't changed the date when I want to retire, hasn't changed my plans. I'm still on exactly the same path as what I was before this happened. Would I like to have gone up 8% and I've made 33 grand? Absolutely, of course I would. But I also know that that's not realistic. You've got to take the rough with the smooth, and this is just a difficult, sticky period. The world's in a bit of a mess at the moment, as we all know, which I won't get into. But there's a lot of things going on, and there's a lot of uncertainty. And one of the big things that markets hate is uncertainty. So who knows? Hopefully things sort themselves out in the market. Hopefully things in the wider picture and, the global economy and the global politics of things with war and things sort themselves out. That's a horrible situation for anybody to be in, to be at war. So hopefully those things sort themselves out, and also the markets reflect that and get back to that strong growth plan that we have. That's it from me. Just wanted to share, my losses, what I'm doing about it, to give you a bit of an insight into somebody who's been through a few of these events now. Like I said, no expert, but I'm starting to get more comfortable with these events the more I go through. If you're interested in this type of stuff, I share everything about my portfolio, my plan to retire at 45 in 4 years. So if you're interested, subscribe. If you have any questions, comment below and I'll answer everyone. Cheers.